All right, okay. Hello, everybody. Hello and good morning. This is me, Darius Anucauskas from Markets.com, and today is Friday. Today's Friday. Today's the last trading day of the week, the last trading day of the month as well. And I think we could have quite an interesting day. Look, about all this and a little bit more in the webinar, which is going to happen in a few moments. So stick around. Do not tune out. Hopefully you enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Ladies and gentlemen, Friday, the last trading day of the week, and also the month of May. So, look, what can I say? It should be quite an interesting day in my opinion. We're getting a few pieces of data sets here and there. Geopolitical issues still remain. The big cocktail of everything, yes, and we'll discuss all that. But before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Also, I'm going to put the usual good morning in the chat room. Good morning, everyone. There we go. Good morning. Good morning, everyone. Also, before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, ladies and gentlemen, Nikkei 225. So look, this morning we got some Japanese data, the usual kind of Japanese data dump at the end of the month, and there we go. We got the Tokyo headline CPI year on year that came out the same as previous, 3.4. The core did push higher. So unemployment rate at 2.5, the same as previous. Retail sales year on year 3.3, better than the forecast and the previous. Industrial production preliminary number, okay, a little bit of a decline here. Okay, that's still doable. That's still fine. So yeah, look, what can I say? The fact that the core inflation, the year-on-year inflation, kind of did tick up a little bit. That puts the BOJ in a bit of a difficult situation, or actually not I wouldn't say a difficult situation. It puts them into that situation where they want to be, because they have been talking about potentially hiking rates in order to help out the economy, or sorry, the Japanese yen, and now they're kind of doing this, and now it's kind of a everything is falling into the kind of all cards, or all these dots on the letter I are kind of getting put. So look, in general, what I'm trying to say is that everything's kind of shaping up in a way how they want it. Yes, we are getting higher inflation. It's it's not really good, and we need to control it. That means we need to oh, excuse me. Oh, something fell into my that means that we need to kind of increase interest rates in order to control it, so everything is fine. The only little problem right now is that was good. This way of thinking was good when the Japanese yen was kind of falling off the cliff, and it was really devaluing against its major counterparts. Now, nobody's excluding that scenario still. I mean, I think that there could be some still weakness for the Japanese yen. The only thing is that at the moment it's not there, just because the market is kind of stuck right now. I mean, it seems like it wants to go higher. This could push the Japanese yen further. Could force it to devalue against other currencies, because again, because the Japanese yen is seen as a safe haven, and that's where everybody's kind of starting to jump into the Japanese yen. However, right now it's a little bit tricky, and we're waiting. I'm still kind of somewhat positive on the stock market, although we're getting these little headwinds, initially on Wednesday, was it? Yes, the court kind of ruled out that the trade court ruled out that the White House tariffs are not not lawful, are unlawful. However, yesterday the appeal court said, no, that's all fine, it's all okay. Anyway, it's a little bit of a big mess. However, it's not allowing the stock market to go higher. However, it's not really pushing the stock market lower. So the investors are still believing that there could be a chance of a push to the upside. But I'll get to the US stuff in a bit. First, let's deal with Nikkei. And another thing that I wanted to show you here, and of course, from the technical perspective, I talked a lot about this already last week, this week. I said, look, maybe we're forming a possible inverted head and shoulders pattern. If that's the case, great, let's wait for the neckline to be broken. And I said that my neckline is kind of this tilted upside line here. Well, tilted, it is already an upside line, so upside line is already a tilted line. So this upside line, which kind of acts as a neckline, and you can see yourselves clearly, I said to you that if we do pop somewhere above that 38,500 zone and we stay above it, then great, I'll go further north. And at the moment, everything seems to be looking quite positive. We're still trading above that 38,500. Oh, sorry, we're still trading below that 38,500 zone, but this is something maybe to keep an eye for next week, for the next month. So let's see. In general, Japanese index closed this month in a very good rally here, you can see. But in general, look, let me get rid of this Fibonacci. Look, if you look at the monthly chart, you'll see a very nice, beautiful pin bar here, beautiful reversal. I mean, this is just a pure textbook reversal here that happened in April, and there we go, we rallied. So in a way, we could see a further push higher, but again, if we're looking at this monthly chart, we'll see that we are still below this downside line. So if you're really looking for some higher levels, well, you need to kind of wait for a break of this downside line, and then we could travel, further north here. But at the moment, we are stuck. We're stuck near that, just slightly below that 38,500 zone. So let's keep an eye on it. And if that gets cleared, amazing. I will go further north. A forthcoming higher high will be confirmed, potentially attracting more buyers into the game. So yeah, let's keep an eye on this one. Again, the trade tariff problems are not going anywhere for now. It seems like they're here to stay. However, there is progress. I mean, there are talks, there are delays. So that's what's helping the market, to move a little bit to the upside. China 50, let's have a look. China 50 is holding nicely above that 50-day EMA. Yes, we had a little bit of a drop here below this area. However, it's all fine. Look, next month we're getting the PBOC interest rate decision. That's going to be at the end of the month. Yeah, but look, I mean, still for now, I think that China is somewhat okay still. We're holding above all my EMAs. But after we dropped back below this downside line, it's kind of raising a few concerns here. But hey, I think that this downside line is no longer needed. I think what we need to focus on, and this upside line is also no longer needed. I think we need to focus on just the barrier, the 13,800 zone here. If we can get a nice clearance of that one, great. I'll go for some higher levels. But at the moment, I am watching this little territory here, this 13,555. If that gets cleared, I will go towards that 13,800, and then if they can get a nice clearance of that one, then great, more buyers could join in. ASX 200 very quickly, unstoppable so far, looking good, ladies and gentlemen. Sorry, just needed a sip of tea. Looking good still, and hey, what can I say? 8,425 getting cleared right now. Let's see if we can go further north in terms of economic data. Let's have a look very quickly here. Building capital expenditure yesterday came out. Okay, nothing major, Nate, nothing major here. Monthly CPI indicator this week we got, and that one was the same as previous at 2.4. So inflation is kind of still holding around, the target, the RBNZ, or sorry, I mean RBA target. RBNZ had its interest rate decision on Tuesday, but anyway. So yeah, look. For now, like I said, for now it's all looking good. Let's see how the week is ending. Another positive week. Let's see how the month is ending. Fantastic movement here on Australian index. I mean, look at this. Let me actually get rid of the Fibonacci here, no longer needed. And look, I think that it's quite logical if this index would end up traveling to this 8,600 zone. However, at this point, honestly, looking at this picture, I really wouldn't want to touch it. Just because whenever we get something like this parabolic, look, it's way too tricky. I mean, this has been probably, if somebody was trying to short this, I mean, I really, I think it's a difficult one right now, and that's why I don't want to rush into anything like that yet. I want to get a clear reversal. At the moment, I'm not getting that clear reversal. Let's jump into the Dow Jones Industrial Average. So, ladies and gentlemen, looking at this picture here. Okay, look, let me just get rid of something that I was analyzing here. Look, I'm kind of leaning towards more upside, to be honest, and I'm still kind of leaning towards some higher levels. And of course, yesterday we got the court ruling, the appeal court ruling, saying that everything is lawful what Trump is doing. So, okay, I mean, look, in general, it's a bit of a mess in my opinion. I think there could be we still have like a lot of headwinds, in front of us. Yes, we have the delays. We have the European Union tariff delays until the 9th of July. The 90-day China agreement, kind of the 90-day. Look, we already did kind of half of it, I think, at least, or a little bit more than half of that period. So I don't know what they're gonna do right now. I think they just delayed the time, gave some time for them to figure out what they want to do next. But I don't know if they're gonna actually reach some sort of a deal. But hey, let's see, of course. But again, I think that for now we could still see some moves to the upside, and I think that this is what the market will consider, that we could still see some moves to the upside because there are so many delays right now. I think that the market will kind of say, "Hey, let's rally, and then we'll deal with those problems later." So, and it seems like this is what's happening. So that's why I'm not really getting very pessimistic on the market yet. Yes, there are some negative headlines that are coming through, but overall, I think the market will just bite its teeth and just continue pushing higher for now. So, long story short, if you're looking for some higher levels on this one, on the Dow, I would say wait for a pop of the 42,000 kind of 900 zone, somewhere around here, this highlighted territory. If we can get that move, amazing. More buyers here could join in. So, I talked about this idea previously that, look, we could see a bit of a retracement here back down. We could see maybe a test of these EMAs on my daily chart. There we go. We're getting a nice little hold up here. So if this continues to hold, I'm going to push again to the upside, but I would prefer to wait for a clearance of that 42,900 zone. Let's jump into the S&P 500. Similar story. We're still this one's looking a little bit more positive, but again, the same story. A clearance is needed, and the clearance is basically here. So this is what I need to see, a break off in order to go higher. And look, just a second. Let me just not this one, and this one, and this one. I want to just brighten it up a little bit. So if we can get a nice clearance of that 5,000 kind of 968 zone, great. I will go towards that psychological 6,000. But if that gets cleared, I mean, so on. Basically, we're going in these little increments just to be a little bit more on the safe side, and considering the fact that we kind of already rallied, quite a bit. So that's why let's just be a little bit on the careful side. In terms of targets, in terms of if we do break through one of the sides here, look, I will say it this way. For the upside, I'm going to aim for the current all-time high. Very simple. Yep, I think that's quite doable. and then we'll see. But for the downside from here, I would say if you're looking for some lower levels, then maybe wait for a drop below the 5,786-87 zone right here, which had been acting as a good area of support. But look, I think if some of you if you're a little bit impatient, then you could keep an eye on this steep upside line taken from the lowest point of April of 2025. So if that gets cleared, the next target is the 5,787, and this is what I will be aiming for. But again, why I'm aiming only for this territory, because we maybe will end up in a little range or something like that. So just kind of keep this in mind. That yes, if we do break this upside line, we could see a bit of a move lower, but there is a problem with the lower side here with the 5,787 territory, which kind of is approximately around this potential lower side of the range, potential range, of course. NASDAQ, of course, yesterday. Look, yesterday we had a good rally initially. We pushed higher, we opened up higher, but then kind of everything, like I said, all these news started coming through about the appeal court, that they're going to be, they're going to be saying that the tariffs are lawful and stuff like that. And of course, this affects one big company here, and that's NVIDIA. This is like initially they had good earnings, boom, there we go, we pushed higher, we gapped nicely to the upside, then we filled the gap, and okay, because it concerns them because they have an issue, because they have they want to export into China. However, at the moment they cannot do that, and that's the whole kind of debate. So on one side, everybody's debating that you need to export in order to continue to capturing that big market share. The others are saying that we're sharing intelligence and blah blah blah, and but again, the thing is that I think that NVIDIA's Jensen Huang is kind of leaning towards that idea that it's better to sell to them rather than allow them to develop, and they're developing very quickly. So better they buy our stuff. But again, it's like I said, it's a matter of time, I think, when China will develop their chips, which will be very, very much in competition with with NVIDIA's. So at one point, it will have to come down. But for now, NVIDIA is the dominant one. They're continuing to control, in a way, the market, I would say. But look, every company comes to an end, eventually. And even let's say when we were looking at companies like these, which yes, had great performance overall, but at some point their times are coming to an end, and yes, they can continue surviving, but let's put it this way, maybe maybe the other competition is coming up. So like, for example, Microsoft, it's doing quite well because again, they have that OpenAI, they have that ChatGPT rights, and that's the new search engine as well. Look, I would say it's an interesting moment that we're going through. I think we're going through a somewhat of a good big technological kind of breakthrough with this AI thing. I mean, you can be pro or you can be against it, for it or against it. I think that there are areas where it could help, and there are areas where it can really be damaging. I'm not talking about, let's say, humanity. I'm talking about more of a society aspect. But again, it's everything is debatable. But yeah, for now, it is what it is. Unfortunately, we're all going through these changes in life. This slowly, kind of trying to destroy our planet Earth in a way. It's like, at least it seems like that. Anyway, coming back to this situation here on the NASDAQ, look, great month, fantastic month here on the NASDAQ, good push higher. And that's what I was saying to you previously. I'm still aiming for the upside here, and I'm aiming for that all-time high. I'm aiming for that all-time high. This is near the 22,222. Beautiful number. Let's see if we can reach that one. Look, I'm not going to exclude a scenario where we, for example, break the upside line, the steep upside line, and move a little bit lower. But maybe we could even drift all the way back to the EMAs. Because look, the 50-day EMA crossed the 200 and now it's crossing the 100. So we could see, you know, the 100 has been already been above the 200. So in a way, everything is still kind of pointing more towards the upside. But the little confirmation kind of correction here could happen as well. So that's why, you know, I'm not excluding the downside scenario, but I'm also saying that, you know, it could be short-lived. Anyway, let's go back into other stuff. DXY, the dollar index. Look, yesterday was a good run, boom, to the upside. There we go, fantastic, and then drifted back down. So the dollar index is not loving the stuff which is related to tariffs. Of course, not a lot of people are loving that stuff, but I think that everybody will be watching carefully today the PCE, the US PCE, ladies and gentlemen. So the price consumer as... Oh my God! Listen, the personal consumption price consumer, personal consumption expenditure number, price, the price expenditure price index. Oh my God! Personal consumption expenditure price index. There we go. Honestly, my tongue is twisting. You know, whenever it's mixing with all these consumer price indices and all that stuff. Anyways, apologies for that. That's my bad. Not trying to find excuses here. You know. Anyway, look. The PCE index is one of the Fed's favorite inflation metrics, right? Look, the year-on-year, the headline one is expected to decline a little bit. Now, the core, where's that core number? Core year-on-year number is also expected to decline. Both of these numbers are expected to decline by 0.1%. So yesterday we saw reports that Mr. Powell was visiting Mr. Trump in the White House, and they were discussing rates and how the White House would love to see, you know, the rates going lower. Of course, Mr. Powell did explain his position, and they do still see inflationary risks to the upside. So in a way, there's no need for now to go and you know, fuel those risks a little bit more by lowering interest rates. Yes, you can. On one hand, you will help the economy. However, we do understand that you know, there's going to be more lending. They were going to hit the market with more dollars, and yeah, it might cause a little bit of inflation. And another thing is that I think that there is more of a it's more of a political game, you know, that they're playing, because, well, of course they're playing a political game. That's, you know, that's you cannot doubt that. But if you're going to drop the dollar, then you're going to make the foreign exports a little bit more expensive. You know, you want to make production in the U.S. You want to show that, look, it's worth it to open production in the U.S. because the dollar is on the weaker side. I mean, the other currencies are becoming stronger, so you know, the U.S. production could become a little bit more interesting, more attractive for the foreign consumer. I get it. Like, it's all, you know, a nice, like I said, nice little political game here. But I think that the Fed is watching this carefully. As I've mentioned in my video yesterday, basically, just a second, bear with me one moment. I just wanted to show you where that video is. So yes, you can find it on YouTube and our YouTube channel. So this is yesterday's video. You can check it out. It talked about the PCEs. Okay, look, what can I say? For now, it's the battle here between Powell and the White House, anyway, so sorry about getting distracted here a little bit. So there's, like I said, there's this conflict, that there's this debate between between Powell and Trump, and of course, if inflation, if PCE comes out on the lower side, now this is what the White House could rub into Powell's face in the ways you see inflation is dropping. What kind of higher inflation are you talking about? So the CPIs recently came out lower. Your favorite PCE comes out lower. So hey, go ahead and lower your rates. But look, jumping into June here, I mean June's meeting, we are expected to see no cut. And if now we would see a cut by the Fed in the June meeting, I think that this is where the market could actually feel a little bit sorry that the Fed kind of, bowed down to the White House. And that's where the issue is. And then, this is where the market actually could work out the opposite way. If yes, lower rates come in generally should be like a positive thing. However, the fact that the market kind of looks at the Fed right now as that source where a source of positivity in a way that we could still stay afloat. So maybe this moment, that if they bow down to the White House, that could actually signal a bit of a sell-off, I would say. Again, it's a tricky moment. I get it. It's a chess game, but we're trying to find some sort of logic here. We're trying to find some sort of reasoning, but at the moment it's maybe a little bit difficult. However, we're trying to do our best. Now, look, in terms of DXY, in terms of the US dollar, I want to just remove everything and have a fresh look. So we are seeing this little roller coaster ride here. Look, I'll try to keep it simple on this one. If we're looking for some lower levels on DXY, first of all, a drop below this 98 point, let's round it up here, 70 zone, 98.70, a drop below that could attract a few more sellers. We could then travel towards the lowest point of April near the 97.92 zone, and if that gets cleared, of course, further declines are possible. We could travel, this a forthcoming lower low would be confirmed, and we could drive further deeper to the downside, and we could start looking at levels. Well, basically levels are back here. Let me talk about those. So basically levels like back in 2022, January 2022, near the 97.44. I know it's not a lot, it's not far, but hey, this whole area has been quite an important one at some point here. So this 94.63 zone as well. So basically in those, in the mid 90s somewhere, that's the next target for the US dollar that could be. So if we somehow see some support for the US dollar, I mean, we see inflation on the higher side, maybe, just maybe, we could, move back up here. But you know what, for me personally, I would prefer to wait for a push above the 50-day EMA shown here as the green line. So in order to consider some higher levels, I think a push above that area is required. So this is where the interesting bit comes in. Like I said, this 50-day EMA shown as the green line has been acting as a good area of resistance. A nice good break above it could attract more buyers into the game. Let's jump into the German index DAX, ladies and gentlemen. So, okay, this animal kind of got tamed a little bit, and I think that yesterday's news from the US that that Mr. Trump is going to be allowed to kind of could be allowed to proceed with his tariff agenda. That's of course not working out well for the German index. Look, what can I say? In general, so far, the highest point that we were doing 22%. So now we're seeing a drift back down. But for me, the most important is the moment here. I mean, I want to see what's going to happen. What's going to happen next? Are we going to go higher? I mean, for me, at this point, I think if you're looking for some higher levels, it's just a clearance of the current all-time highs needed. So whenever you're hitting levels like these, yeah, you need to be a little bit more on the careful side. At the moment, we're resting near this 23,912 zone right here. Good area of support. Let's see if we can drop below that. If we can, amazing. I'll consider a move lower towards this little area, this 23,390 zone. UK, the FTSE 100. UK, the FTSE 100 here is at an interesting spot here as well. A drop below this 8,709 zone could attract a few more. Actually, you know what? 8,718. I think that's a good area of support. I think that's much better. A nice good drop below that could attract, yes, more sellers. We could then aim for the 50-day EMA or something like that. But at the moment, we're ranging. So while we remain inside the range, do not rush into things, because again, this could, you know, drag on. We could be getting a few false breakouts up here or down here, but keep your eyes on the daily candle. Oh, wrong. There we go. That's the one I'm looking at. Keep your eyes on the daily candle and the body of the daily candle. Ladies and gentlemen, let's jump into gold. Still within the falling channel. Look, I'm not going to say too much about gold because it's not the week of, in general, it wasn't the month of gold. I think it kind of left it, you know, for oil. Yeah, for now we're in the falling channel. We need a clearance of the upper side in order to go higher. The prevailing trend was to the upside, so now we're, like I said, in this falling channel. It is a greater chance for this one to break out higher. However, while we remain inside the pattern, the trend could remain to the downside, and we could continue drifting lower. However, as you can see here, somehow this 3,285 zone is providing spectacular support. Yes, yesterday we cleared it, but we stayed above that area. Look at this, well done here. This area, like I said, is proving to be quite an important one. This can go away. Let me get rid of it. So now the focus is that if we do fall below the 3,285, next target is the 50-day EMA together with the 3,200 to 110 zone, somewhere around there ish. Silver, yes, similar story. Where after we broke this little kind of falling channel, we're now testing this 33.68 zone, so that's my barrier for the upside. Pretty much simple. The only thing is I want to redraw this because, again, I think that what's happening here right now, we're getting somewhat of a triangle pattern. We're getting into a bit of a squeeze. So hey, for those who are waiting for something interesting, actionable, wait for this one to get out of this formation, because at the moment, like I said, we're getting into a bit of a squeeze. So hey, you know, don't rush into things, but keep in mind that, yeah, there could be an upside scenario here working out, because again, according to all the TA rules, such patterns tend to break to the upside. However, the question is this actually an ascending triangle, or is it more of a range? Let me show you what I'm talking about here. Let me get rid of this. Yep. So is this something like this? Well, if that's the case, either way, we're not going to, you know, rush into things. What we're going to do, let's say if we do break this upside line, I'm going to aim for this potential lower side of a potential range. So as I said before, it wasn't gold's month, it was more of oil's month where there was a lot of talk around oil, and I understand that there is not really a lot of action, I would say, maybe in oil. And looking at this, I mean, the previous month was a bigger drop here, right? However, the thing is that everybody's talking about oil, and I'm referring more to the talks, you know, the headlines that we're getting, and it seems like there are some issues brewing in the OPEC club, OPEC plus club. No, like oil. I mean, well, the price of oil is a little bit on the lower side, so maybe they would need to lift it. However. Some members of the OPEC Plus club are not willing to slow down their production. And look, from their side, they have their reasoning. You know, the other side also has its reasoning. It's not really the what can I say? You know, it's like not really like a binding binding friendship that, you know, they have to listen to each other. They still do whatever they want. but they just try to, you know, come to some sort of a like a reasoning or conclusion or like consensus, and you know, in order not to go crazy too much. But at the moment we're going through a crazy world, so everything is crazy, and yes, certain friendships are getting tested. Let's put it nicely right now. So look, from the technical perspective, what we're seeing here, we're seeing a hold up below the 50-day EMA. So that's great. So we're establishing the fact that the 50-day EMA is something to watch here on a daily chart, and maybe that could, you know, play out nicely later on. So somebody might say, hey, but Darius, what about like maybe we're forming an inverted head and shoulders pattern? Look, it could be the case, but for that idea, maybe I would need to see a break above this 63.87 or in general $64 mark. I think that that could be quite logical. So a break through the $64 mark may attract a few more buyers here into the game. Now, again, we're watching this carefully, but at the moment we're also seeing, and we're also seeing that the commodity is within a triangle pattern overall here since around what? Since around like mid-April, and we're in this triangle pattern, meaning that while we remain inside the pattern, we could, you know, still move towards either of the sides. But if it is a triangle, if it is a symmetrical triangle, then we need to look at the prevailing trend. The prevailing trend was to the downside, and well, I mean, the breakout for this one could actually happen to the downside as well. So I'm kind of coming from this perspective. So I'm seeing that, you know, maybe this could actually eventually still drift lower. That's why probably I'm a little bit more on the downside. Let's jump into natural gas, still stuck. So it seems that we could be forming something of a triangle pattern right here. Let's see if that's going to happen. I'm not going to say anymore, but while we remain inside here, I will not touch this. I will just observe the price action. Let's jump into a very quick look at platinum. What's happening? Ooh, what a nice jump here on platinum. Look at this. Boom. We cleared the psychological 1000 zone, ladies and gentlemen. Wow. You know, platinum is enjoying the moment. And look at this monthly chart. Beautiful, beautiful move to the upside. Look, there is demand. There is demand, and yeah, we're seeing that here clearly on the chart. Palladium, what's happening here? It's still, you know, on the lower side, still below that barrier, that psychological barrier of 1000. We did have a few occasional overshoots here, but yeah, we're still drifting at the end of the day, at the end, you know, closer to the end of the month, we're drifting back below that 1000 zone. So let's jump into the Forex world, ladies and gentlemen. AUDUSD. So I talked a lot about this last week, this week. Look, I'm still gonna say I'm cautiously bullish. We still remain above all my EMAs here on the daily chart, but a push above the 0.6515 zone here, this is what I need in order to go higher. For the downside, a drop below all my EMAs could do the trick here, and at the same time, we could fall below the 0.63, well, actually somewhere 0.6368 zone, somewhere around here, maybe. Yeah, that's my kind of barrier for the downside. However, the problem that I have is that maybe, just maybe, this could end up being something of a range, maybe. I don't know. Like I said, it's really difficult for now at this point. So hey, let's see. For now, there could be a chance for the move lower, but for that, in the short run, I would say keep your eyes on that 200-day EMA. AUDNZD, very quickly. So the battle of the two risky currencies. So far, the New Zealand dollar is winning. We had the interest rate decision here on how was it, on Tuesday? Wait just a second. Sorry, Wednesday. Wednesday. Yes, interest rate decision. There we go, where the central bank lowered its rate, but it seems like, you know, we don't care. New Zealand dollar is still fighting. Maybe because the US dollar is not feeling very well, so that's why You know, we're still looking at this from the perspective of a possible move higher. But again, a confirmation break above the 0.6030 zone here is required. NZDJPY, similar story. There is a chance for this one to pop higher, but again, with you know, current situation with the BOJ, as I was talking, maybe, you know, the Japanese yen could get stronger. But again, it's if there's going to be no action from the BOJ in terms of hiking their rate, then we could see actually some weakness here and in coming into the Japanese yen. USDJPY, similar story, but here we have a problem with the US dollar, which is on the weaker side. So look, in general, if you're asking me, I would prefer to wait for a drop below the 139.90 zone somewhere here in order to go lower, but I do understand we have a lot of impatient people, but well, I'm sorry to say that, but you will have to be patient. If you're looking for some higher levels, a push above the 50-day EMA, at least a push above the 50-day EMA here, wherever it's going to be, may do the trick here for a few more buyers. US dollar against the Canadian dollar. Look, next month is the central bank month. I mean, we're going to get the Fed, we're going to get the BOC, we're going to get the BOE, BOJ, PBOC. If these abbreviations don't tell you anything, well, they're all central banks. You can check them out. So yes, we're going to have a lot of those, and of course, like I said, the BOC is one of, Bank of Canada is one of those, the Federal Reserve. So we're carefully monitoring US dollar against the Canadian dollar. At the moment, the Canadian dollar has been kind of on the stronger foot, but after like recently reversing back up here and pushing back above this hurdle, this the low of the 6th of May, that's where for me, like the issue remains, because we're kind of not giving up, it seems like that, at least. So, but I would say that the bears are not really giving up as well. You know, maybe we're still below this downside line here. Maybe this downside line could continue to provide resistance, meaning that the direction is to the downside. US dollar against this. Well, yes, we have the SNB as well, the Swiss National Bank. So those guys are expected to cut rates, so maybe expect a little bit of weakness in the Swiss franc. Yeah, let's see if that's going to be the case, because look, so far we had a great run here on USDCHF. It really strengthened, but this right now could be somewhat of a possible reversal signal. Maybe in June we could go back up a little bit. Let's have a look at that. Very quickly on EURUSD, let's have a look what's happening there. Still, you know, still kind of still somewhat bullish. We're holding nicely above this 1.1265 area. So if we continue to trade above that zone, great, wonderful, more buyers could join in. Yeah, that's what can I say. What can I say? I mean, this is the approach right now I'm taking. However, if you're not really feeling comfortable with this idea, I would say just keep your eyes on that 1.1425 zone. If we get a nice clearance of that one, great. Well, my next target is the 1.1573 zone, and then we'll go from there. Let's have a look at EUROJPY. Okay, this one's not giving up. It's not really pushing higher, but at the same time, it's not really giving up to the bears. So, okay, we'll just continue targeting the upside here with when we see that there's this 164 territory, which is providing good resistance. So a nice good pop above that could attract a few more buyers into the game. GBPUSD still holding above the steep upside line here, and we're holding above the 1.3444 zone-ish. And I said to you recently that this is what I will continue monitoring, and as long as we stay above this area, I'm going to continue targeting the upside. If we start dropping below this area and we clear this steep upside line taken from the low of the 8th of April, then yeah, we could see a bit of a retracement back down. Ladies and gentlemen, now let's jump into dessert. Bitcoin, so the crypto world. Look, we are having a nice beautiful move back down, and I talked about this. I said that look, we're now seeing a little bit of a retracement, which is fine, but we found good resistance near this 111,700 zone. This was a good target. You can see it played out very well. We actually reached the 112 zone. This area has been the kind of Fibonacci extension zone. And this is what I am looking at for now. Now, ladies and gentlemen, what can I say? For now, I would say that I am keeping an eye on this 112 barrier. If I'm looking for some higher levels, well, I need a clearance of that one. Bitcoin Cash, similar story, nice drift lower, and this is where the tricky bit comes in. We're breaking the steep upside line, and we're approaching my EMAs. Look, the last resort for the bulls to step in could be somewhere around this these EMAs. However, if we struggle to remain above those, then a break below these EMAs could open the door to some lower levels. Ethereum is still okay. So Bitcoin and Ethereum are the two cryptos this month that have been attracting a lot of inflows and net. We saw an increase in net inflows into the ETFs, and basically the ETFs that's what was driving the kind of the surge in a way, because look, you're having a change in sentiment in people's perception as well, because look, you made your money, right? I mean, now you like the crypto world, but you understand that keeping your money maybe with one of those exchanges which can be attacked very quickly, it's becoming a little bit difficult, and you start thinking, how can I preserve my capital? And well, you want it or not, you like them or not, but those big boys like BlackRock, VanEck, Fidelity, those guys are, they have their money protected. Well, they have the money protected, so. And they offer ETFs, Bitcoin, Ethereum ETFs, so which kind of are tracking the same thing. So that's why people are thinking, so why I need to continue having risks with those other platforms when we can jump into BlackRock, when we can jump into VanEck or Fidelity. I know, like, in general, maybe somebody will say it's a little bit immoral, but However, that's unfortunately how the immoral financial world works. And if you're thinking that you're in something great here, then well, think again. For now, I would say this way, that there is a chance for Ethereum to push higher, but again, I need a pop above the 2,737 territory here in order to go to the upside. XRP, beautiful decline, dropped, fantastic. I talked about this. And hey, I said on Wednesday I said to you that it looks a little bit more on the bearish side. There we go, boom, fantastic move to the downside, which cleared the EMAs, the 50 and the 100. We cleared this 2.2850 zone, and we're now targeting the 200-day EMA. That's what I'm going to do, and that's what I'm going to stick to. Litecoin, similar story, dropping below all the EMAs, and I said that if we do remain above those, I will consider a rebound. But if we're struggling, then yeah, we'll see. We could see a move lower. And also, I want to have a look if this is working out nicely here. Look, we have ourselves a falling channel, something like that. Well, of course, we look at the prevailing trend. The prevailing trend was to the upside, so a greater chance for this one is to break out to the upside. However, a clearance is needed. However, I've seen this working out in the opposite direction. So let's not rush into things. I will just want to quickly mark one of the key areas of support here. There we go. This one around here. Yes, I think this is quite logical. Dogecoin very quickly dropping lower, dropping below that 0.20 zone, and not yet 0.21 zone. Yep, it's falling below that. We're falling below all the EMAs, so let's see if we can stay below all these EMAs and drift a little bit more to the downside. However, some of you might say, hey, what about this falling channel as well here? Yeah, could be the case. Don't get me wrong. Could be. Let's see if we can drift further below this lower side of this falling channel. If not, then yeah, okay, I'll consider a little bit of a rebound back up here. Let's see how this is going to play out. We're now near the lower side of this falling channel. Let's see if we stay below it. Polkadot, beautiful decline, beautiful drop below this upside line. Yep, it's opening the door to some lower levels right now. Very simple. So hey, 3.82, I think that's quite doable. However, I'm interested in this 3.25 zone-ish, which is near the lowest point of April of this year, or in general, the current lowest point of this year. And finally, Tron, one of my favorite ones. This one's still holding on, as you can see here. I talked about this when we were still below this highlighted zone. I said I need a clearance of that one in order to go higher, and we cleared it. We went higher. Now we found resistance near the 0.2822 zone. That's my barrier for the upside. Pretty straightforward, pretty simple. Nothing to add here anymore. So we're watching the end of the month. We're watching the US dollar today. We're watching the PCEs. We're going to see how the market reacts to that. We're going to see how the indices react to that. So yeah, ladies and gentlemen, I hope you found this useful. Thank you very much for watching and listening. I really appreciate your time. Look, join me on Monday, as always, 7 o'clock GMT time. And yeah, we'll go from there. We'll have a new week, new month. And hey, I hope this month will end up, positive for you. If you're still trading, if the month is already positive for you, honestly, I would strongly suggest maybe just not to touch the market. Just take your profits, enjoy your profits, because again, when those PCs come out, maybe there's going to be a shakeup. Maybe there's going to be like a one-way traffic, and you have a strategy where you're counter trend trading and all that stuff. So that's why just be a little bit more on the careful side. If you really want to go into the market, just use the most minimal amount possible. Just like I said, just to protect yourself. Ladies and gentlemen, thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Monday. Have a nice weekend. Bye-bye.